Welcome. In this video, will the downtrend of Zbcn coin continue? We will analyze it. Don't forget to subscribe and please watch to the end to understand. When we carefully examine the chart through the lens of technical analysis, it is clearly seen that after a rise from a certain bottom level to a peak, the price has entered a correction phase. During this correction process, one of the classic tools of technical analysis, Fibonacci retracement levels, gains significant importance. The Fibonacci tool is widely used among investors and is a powerful indicator, especially for identifying potential support or resistance zones during price pullbacks. At this point, the 0,618 level within the Fibonacci retracement levels stands out as one of the most critical zones. This level, also known as the golden ratio, holds a very special place in both mathematics and technical analysis. When Fibonacci is applied to the price movement for analysis, a pullback after a certain rise that retraces to the 0,618 level and then reacts upward from there presents a highly positive technical picture. Looking at the current price movement, we see that following the Fibonacci retracement drawn from bottom to top, the price has pulled back to the 0,618 level and found strong support there. This indicates that this area is being closely monitored by investors and is met with strong buying pressure. In other words, the drop to the 0,618 level is not only seen as a correction process by investors, but also as an opportunity zone. The price, having touched the 0,618 level, has now initiated a strong upward move from this area. This is an extremely positive development from a technical analysis perspective, because such reactions often indicate that the price is likely to return to an uptrend and aim for the previous peak level. Moreover, upswings beginning from this point may offer potential profit opportunities in both the short and medium term. Another important element to watch in such a scenario is volume. If there is a noticeable increase in volume as the price reacts upward from the 0,618 level, this shows that buyers are stepping in with strength. Such rises supported by volume are generally much healthier and more sustainable. In technical analysis, this is why it's essential to monitor not only price, but also trading volume. On the other hand, the Fibonacci 0,618 level also holds great importance in terms of investor psychology, because this area attracts both profit-taking investors and new buyers looking to open positions. Therefore, the price stabilizing at this level and then moving upward is perceived as a positive signal in the market. This signal gives investors confidence and increases their appetite for taking positions. Another point to pay attention to is how far the price can move upward after breaking out from this level. If the price manages to surpass the previous peak, this confirms the uptrend and shows that the market structure is shifting back in favor of the bulls. From that point on, targets can be set based on Fibonacci extension levels. Especially the 1,272 and 1,618 levels can be considered as the next price targets in technical analysis. In conclusion, the Fibonacci 0,618 level is not just a number in technical analysis. This ratio also represents a point where market balance is restored and buyers prevail in the struggle between buyers and sellers. The fact that the price has reached this level and initiated an upward movement from here should be considered a very strong and positive technical signal. But we can't rely on Fibonacci alone for analysis. Let's also look at other metrics. Stay tuned. In the world of technical analysis, wave theories, especially Elliott wave theory, are highly valuable tools for understanding market movements and forecasting future price trends. This theory suggests that prices do not move randomly, but rather progress within specific structures and cycles. According to Elliott wave theory, markets typically move in a pattern composed of 5 main impulsive waves, followed by 3 corrective waves. These structures apply to both upward and downward price movements. Now let's turn our attention to a completed 5-wave pattern in the downward direction. Upon careful examination of the chart, it appears that a classic 5-phase downward impulsive wave structure has been completed. These 5 waves indicate that the market's downward momentum has developed in a systematic and gradual manner. The first wave usually signals a change in direction, while the second wave represents a temporary recovery. The third wave is generally the strongest, and the fourth wave provides a brief pause. The fifth wave is typically the final selling wave, after which expectations for a trend reversal begin to rise. This is exactly where an exciting possibility comes into play. If the 5-wave decline has indeed been completed, there is now the potential for a corrective move in the opposite direction, meaning the start of a new upward Elliott structure. The first step of this new formation would be the beginning of an upward first wave, This wave is often seen as the initial sign of market recovery. Increases in volume, improvements in momentum indicators, and a gradual rise in prices support this process. The second wave that follows is a short-term corrective wave. However, instead of discouraging investors, this correction is a natural process aimed at gathering strength and consolidating the market. What's important here is that this second wave does not fall below the starting point of the first wave. That is, it does not dip below the first wave's low. This is crucial for maintaining the validity of the upward structure. The structure currently observed on the charts is giving strong signals that a reversal may be underway following the previously completed downward five-wave pattern. These signals include price forming a base rather than continuing to fall, holding at key support areas and making small upward attempts. If this structure continues and the price completes the second wave and moves into the third upward wave, a much stronger upward momentum may follow. The third wave is typically known as a strong rally phase that attracts investor attention, increases buying interest, and is supported by high volume. If the structure develops correctly up to this point, the triggering of the third wave could result in a sharp upward move in the market. This surge could offer highly profitable opportunities, not only for short-term traders, but also for those considering medium to long-term positions. It's important to remember that Elliott wave theory is not just a prediction method. It is an analytical approach that suggests prices move based on mathematical and psychological foundations. Therefore, what's at stake here is not just an upward price move, but also a shift in investor sentiment, reduced selling pressure, and the restoration of confidence. The current price action is laying the groundwork for investors to patiently position themselves. The completion of the five-wave downward structure means there is now potential for the beginning of a new upward cycle. If the price completes this structure, then the first and second waves upward could be followed by a third wave, which may signal a major surge and acceleration. Especially once this third wave begins, price movements often exceed expectations, not only retesting previous highs, but also pushing toward new targets. At MACD, this powerful technical analysis indicator that measures the convergence and divergence of moving averages, is a great help in understanding trend reversals or trend strength, especially in the markets. Currently, when carefully analyzed on the charts, a very critical structure has started to form in the MACD indicator. In particular, the convergence between the MACD lines and the signal line raises the possibility of a potential upside crossover. Such a crossover is always considered an important bullish signal for investors. An upside MACD crossover usually signals that price action is starting to shake off negative pressures and a new bullish momentum is building. Such crossovers have repeatedly heralded decisive turning points in the markets in the past. Therefore, if the MACD line crosses the signal line from below to above, this could add a strong positive tone to the market. At the same time, this move is an important development, indicating that buyers are starting to regain strength and the influence of sellers is weakening. We should wait for the MACD crossover. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.